Welcome to the Equity Market Minute by Bloomberg Intelligence. I'm Gina Martin Adams. I'd like to talk a little bit about equity market style today, and that is the growth versus value conundrum. Most investors look at valuations and they see growth styles generally excessively valued relative to the value style, but that doesn't mean that growth can't continue to outperform. Let's take a look at a couple of charts. My first chart shows earnings growth over time for value relative to growth and the stock's performance. And as you can see, there's a pretty close correlation between the two. Indeed, when growth stocks are producing faster earnings growth relative to their value counterparts, they tend to outperform value. Right now, growth stocks are growing faster from an earnings perspective. Indeed, over the next 24 months, they're expected to grow about 200 basis points faster than their value counterparts. This may continue to support the growth trade. My second chart shows the relationship between style dynamics and broader market valuations. What we find over time is that growth tends to outperform value in periods of time in which valuations are generally expanding. This chart shows the Russell Growth versus Value series and the S&P 500 earnings relative to price. As you can see over time, when valuations are rising, it tends to favor growth. So until the earnings environment changes or the valuation environment shifts into more of a bearish trend, it's likely that growth stocks are going to continue to hang in there despite lofty valuations. Thanks so much for joining me for the Equity Market Minute by Bloomberg Intelligence.